Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show, where we look at what happened in the market during the last week and how we can plan for a better trade for the next upcoming week. And this is for the week that's starting from August 22nd, Monday, tomorrow, 2022. So let's get into the charts and see what exactly happened. This is a weekly chart that you're seeing on the Nifty, and on the right side you're seeing Banknifty. What you see here is it's not a hammer exactly, more like a doji. Basically it's a short small body basically, right? So small bodies are indecisive. Look at the big size, that's also selling pressure on the top. So inverted hammer on the top of a rally could indicate a reversal. Similarly on the Bank Nifty also you're seeing almost an inverted handle. Body is small, wick is small, which shows the pressure from the top, selling pressure. And inverted hand on the top of a rally could indicate a reversal. Remember, we have a trend line channel that's going here, and previous week the irony is that markets had broken out of this decisively but failed to close it in the same week, while Bank Nifty has already broken out of it and now has fallen back to the previous swing high, one of the previous swing highs level exactly, right? So this is where we are. So it's back to the crossroads, because the very reason that it gave the hope that last week could be a breakout, which it was. Even now it's not ruled out, but the only question is whether it will fall back into the channel or not. If it falls back into the channel, then it's going to be trouble, right? It could take a support at the moving average level, or it could go down and make another swing low. All these possibilities are there. We cannot predict that. There is also the probability that this is just a support that's taken, a small retracement that happened after a fabulous rally, and it can take the support of the trend line channel and bounce up. It could do a CIP on the daily, and all this are possible, right? So let's get into the numbers and see what happened. Right? It's a flat close that happened. As you see, a small body, 0.28 on the Nifty, 60 points, and 0.15, that's 57 points. That's 60 points is all that was gained. And actually Bank Nifty did not gain, it went flat and went slightly down also, right? Week wise if you see, right? But still is comfortably above all the weekly moving averages. So gravestone doji, or no, or is it an inverted hammer, right? Anyway, it's a small body, is decisive. That body is smaller than inverted hammer, right? So that's why I thought it's maybe a doji. But doji, the body needs to be little more smaller. It's little more than a doji, but less than a hammer. So let's conclude that it's an indecisive hand. Remember that we had this kind of a pattern that emerged after 2,800 points rally that happened in the Nifty, and 7,400 point rally that happened, right, from the previous single low, right? That's where we are, right? So the trend line channel top, as we had seen earlier, is the crucial, decisive thing that we have to watch out, right? The good thing is that there are plenty of supports. We'll see that in the next slides. A lot of supports on the downside. We're talking about the weekly channel. If you look at the daily candles, you can see that it's worse, right? This pattern on the top of a rally is not at all good. It is known as a exhaustion or a engulfing, bearish engulfing pattern. Look at the size of the candle. It engulfs 3 days completely inside one single day straight, right? Same in Nifty also. So bearish engulfing is very powerful. So the coming days, there is a chance that you can take a support here and bounce, but there is more probability that there is some consolidation that happens. Such big moves after that, unless there is a big crash that's going to happen, it's not going to drastically fall down. It may consolidate at this point some time. Definitely it cannot rise above this in one single day. That's not possible. So it has taken a big hit, so it needs some time to resurrect from there and then move further up, right? So it may be smaller body candles that may be coming inside this before it gets enough energy to do that, right? That's what we'll have to anticipate. But definitely on the daily charts indicates bearishness from the price pattern point of view, right? At the same time, it was the pullback that the market was, everyone in the market participants were looking out for, because we had a tremendous rally, right? And we had enough pullbacks of 3 or 4 pullbacks in the early stages of the rally. But once it crossed the 16,750 or 17,000 kind of levels, it was just a small pullback that has happened. Otherwise, it was a huge 1,000-point rally that happened, and expectation was that there was a pullback that could come. In our this weekly show itself, we have told that many times that it may come in any time, so suddenly when you are least expecting. That's exactly what happened. It was least expected. It's a bull trap as well. The bull trap is when a price moves above the previous candle's highs and then traps the bulls and then closes below it, right? That's exactly what happened. A bull trap, bearish, engulfing on the daily charts you see, and an inverted hammer, a small body or an indecisive doji kind of patterns is what you see on the top of a trend line from where anything would happen, right? We are at crossroads. Bollinger Bands are indicating that we have fallen off from the pricing bands. Definitely we have fallen off from there, and this median or the 20 moving average of the Bollinger Bands is pulling it towards that. It's pulling it, that's quite natural. The further you go away from the moving average, the more probabilities that it could pull it back, and that's exactly what happened. Now how big is that pull, right? Could it pull it to 17 to 50, right? Or would it get satisfied by this single pull alone is all that we can look forward to, right? So we talked about this another perspective on the weekly charts, right? So let's look at the levels now, right? 18,000 Fibonacci 60 is going to be the first resistance, then 18,100. Previous swing high is near to 18,100. 18,115 is where the previous swing high. That's a major resistance that's going to be forward. 18,200 is also having resistance, then 350 and 400, and then 18,600 all-time high. So the downside is where we will be looking at now, right? The previous points all will be resistance now. 17,800, 17,850 also is last yesterday, so that also would be another resistance. But the support is there at gap resistance zone at 17,500 to 7,600. Exactly 17,559 is where we have to look out for. On the upside, it's 18,115, and downside 17,559. After that, you have 17,300, 17,400. Then 17,200, 17,300. Then another gap comes at 17,000 nearby levels, right? So support for Nifty and resistances also, right? Banknifty, the immediate resistance above we will have to look forward is at 40,160, 40,160, 40,000, 40,200. That's a zone that you look above that. You have the 41,100 to 41,400. But the resistance from where it slipped down, right, is also there, 39,300 to 39,500, and then 38,900 and 39,900, right, levels. But the major support would come in at 38,350 to 38,600. That's a 38,400 is a gap support that we have marked in the yellow. So that is breach. Then we have some troubles that may come in. That means it may be falling back in the channel of the weekly. 38,038 would be a support, then 37,800 would be support, 37,500 also support, and then we have another gap support at 37,000 nearby levels, right? That's a Banknifty support resistance levels. Make a note of this. Moving on, the momentum and the trend analysis. If you see the left side, you have the Nifty, the daily, and below you have the weekly. Right side, you have the bank index momentum that is shown, and then you have the weekly momentum also for the bank, right, on downside here on the left corner. Now Nifty is showing that the momentum has fallen slightly, but it's still in the bullish zones, and there is also a bullish reverse, positive reverse divergence, which is kind of good. It's not confirmed. If it is working, then it could bounce up from here, take a support from the CIP, and then it could move further up, right? Or there is also a possibility that the momentum can dip and take a support at 60. Still, the reverse divergence would be valid, and there is a possibility of a bounce up. On the weekly, it is bullish. So both time frames, it's bullish only. It is maintaining the bullishness from the momentum perspective, and also it is having a PRD. Everything is fine, no doubt about that. But the weekly, it's just on the edge. Another week, and you're down back in the sideways in the medium term. Banknifty is the same story. You can have positive reverse divergence, which can be bullish, or it can move further down to 60 momentum and then bounce up from here. Still, we have that valid divergences that came there in the daily. Weekly also, it's bullish. So momentum wise, for Banknifty, both and Nifty, both indices are bullish, maintaining the bullishness with the divergences, but there is scope for that momentum to take a support at 60. It could fall further down as well. It's possible. As of now, all is good from the momentum perspective. Trend. Look at this trend. Oh, the diagrams are not there, unfortunately, but trend we can very well see that. Let's get into this and have a quick look. If time permits. So trend is actually, yeah, forward put the picture in there. So trend, what is it? It's bullish, right? Trend is bullish definitely on the short term and the medium term on both the indices. The trend is in the DMI positive zone. That means the trend is on the upside. But the only catch there is that the trend has taken a bend on both the Nifty and the Bank Nifty on the short term. So that bend on the index could indicate there is a possibility of a reversal that could happen. Right? The strength is, this is the DMI positive, DMI negative. So it's in DMI positive zones, no doubt about that, right, on the short term. But this bend indicates that there could be some reversals. Many times it has happened that this trend could once again after a small dip can move up. That is possible, but you have to be just slightly cautious about that factor, which is not captured in the picture form here. So trend, momentum, good. So moving on to the volatility analysis and the open interest analysis, the VIX had spiked up. Obviously, the market had such a big fall on Friday, so still you had only 4.5% of spike and still not about 28.28. But the closer it is to 20, you have to be cautious. No, it can spike up again and then move all the way back. No? So you have to be slightly cautious the more it is closer to 20. What about that, right? That's VIX. So VIX has spiked up. Obviously, there is uncertainty that has piled up. That's why market made such big call. So we'll have to see whether that continues to spike up or not in the coming days. It is just one day action that spiked up the VIX. Right? We'll have to see if the next week end of that, how would be the VIX? Would it be another spike or will it be cool or be flat? That's what we have to see. Just one day's spike would not mean much, but having it below 20 is fine. Open interest is showing long unwinding in both Nifty and the Bank Nifty on the futures open interest. That is action. Long unwinding is people have been long, now they are having trouble. We've seen such a big crash from the top, right? More than 1% move on the Bank Nifty and the Nifty. So there is unwinding portions that are seen in the options future interest. Now this is analysis on the options for the August 25th monthly expiry. Options data is showing again, the levels are showing that they're kind of more towards the bearish side, right? Because of the Friday's price action. Put call ratio is suddenly from 1 it has come to 69, 0.69, 0.64 in Nifty and the Bank Nifty. So we just not at all bullish, right? Just the previous week we had 1.1, 1.2 kind of levels. Imagine this one day's price action, it is back to 0.6, which is far away from the 1 and far away from bullishness, right? That's something that you have to keep in mind. Look at the Nifty option support and resistance levels. It's more towards the bearish side because the green or the number of call writing is dominating. Right? Look at the range of 17,000 and 18,000. 1,000 points of put and call gap is what the writers are saying. So the maximum put writing is there and call writing is at 18,000. Second level of support and resistance is 17,500, where the maximum put writing is seen. Second maximum actually 7,900. Second maximum call writing. So that's the levels that you keep in mind. Right? Writers are thinking that there's a possibility that it can hold 17,000, and writers still see that there is high probability that 18,000 may not be an easy task to cover, although it's just 300 points away. So futures OI and PCR we are already seen. Look at the Bank Nifty. The range is wide also, 38 and 39,500, and the first level of highest put and call writing support and resistances. Second level would be at 39,000 and 40,000, where the highest, second highest support and resistance is seen. That's what the open interest analysis is showing. You can see that a lot of call writing has got added up. The last day's price action call is getting added up because resistance is what market is seeing. Remember, this is for the monthly expiry. Monthly expiries will be volatile, more volatile than the weekly. Moving on, let's see how the different sectors performed. Right. So you can see that except the pharma, all the sectors in the short term is bullish from the momentum perspective, maintaining the bullishness, right? The week-wise data, if you see, it was just 0.5% up from the IT, 0.25% on the metal up, water sector 0.25%, pharma pharma was down, 1.1% FMCG up, 1.6% up. So overall, it was across the sectors, close green, but did not close as much as it had done the earlier part of the week, because earlier, out of the 4 trading days, the first 2 trading days on the upside, and the last 2 trading days on the downside. That's exactly what happened last week, right? So farmers not doing great. Otherwise, everything looks fine. And auto and FMCG still remain to the most bullish, because the weekly and the daily both are in the bullish zones from the momentum perspective. So the sectors, that's what we're talking about, right? IT, so in the reversal mode, it has taken a support and it's bouncing up. A lot of resistance, including a gap that you can see in the. So momentum is in the sideways. Metal is greater resistance, and it has been doing a very good clean sweep up move, and it is finding some resistance at the 60 RSI, and trend is also on the upside. But the small body is saying that there is selling pressure from the top. That's the metal. Moving on to the metal, you can see inverted hammer after a breakout, right? So it seems to be exhausted. The breakout may need some pullback before it can further move up, right? Remember, it is a multi-year breakout that happened. Pharma, if you see, it's not doing good. It's sideways momentum, right? Rest all momentums are in the bullish zones, right? Except not rest all. Rest all seen it is momentum is rising. This is flat momentum on the pharma. You can see that, right? There's got resistance on the upside. FMCG is also on the breakout of a cup handle, but inverted hammer is formed. Neckline is the area that you have to watch. It will continue the breakout after taking a support, is what I will say. Nifty is also cup handle breakout, handle part is formed. It has taken a support, reversed, moved up, but again inverted handle. All inverted hands, and momentum is sideways actually on the medium term. So the medium term bullishness is seen only in the FMCG and the auto. Rest is all still sideways. Short term, all are bullish. Maintaining all bullish except pharma. Index heavyweights, HDFC Bank is showing a dodgy small body, selling pressure is seen, resistance is seen, momentum is still not in the bullish zones on the weekly basis, so slow moving, still sideways. HDFC also selling pressure, small body, at a support zone, trying to hold on that level, momentum is sideways. Lions did a good reversal, but again selling small body, red bearish candle, and momentum is still sideways on the medium term. None of them are doing that great, but slowly picking up and maintaining the sideways momentum. Moving on, index heavyweights, IT stocks. We have marked that there is a serious resistance that's going to be for the Infosys to climb this, and it is seen by the last 2 days. Momentum is sideways, and momentum is sideways in the TCS also, and TCS has climbed the resistance from where it slipped off several months back. Now back there, and then failing the heat. ICICI Bank is doing good. Look at the move. They're just blocking out, and then big Brokerage candle. But the last week was not good. But still close green above the previous high, and it's possible that it could move further up, or it could take a small pullback and then move up. Overall, it's clearly bullish, the most bullish among the heavyweights, you can say. Black Bank also hit the resistance and then fall down. It has been zigzagging in this zone for long, on the sideways for medium term since very long time. So the clear winner here is ICICI Bank. It's most bullish on the heavyweights. Those are all managed to keep up the sideways momentum. Last week Fyers were buyers, which is good. 3,130 crores net buyers there were in days of 1,800 crores. Even Friday the big selling happened, but Fyers were net buyers, which is a surprise. It was a DAS who sold. If you look at the figures, August 19th, you can see that the FIS bought 1,100 crores and 1,600 crores of selling. The big selling what happened from DI is what happened. So if I continue to be in the buying mode, except one day in the last week is a good thing. Hope it continues that way. Yes, markets, if you see, it was kind of indecisive, small body candles. 0.5 is where the pullback is seen in the Dow, and 2.5 is the pullback. So more higher pullback can be seen in the Nasdaq and the S&P 500. You can see the bearishness is more, but remember we had a reversal, climb back to the resistance zone, and it's trying to hold on that level. Exactly what is happening. You can see that the Dow Jones is still in the sideways momentum on the medium term, just managed to climb the resistance and then formed a gravestone doji. This gravestone doji is clear indecisiveness. although it's a small loss only. It failed to maintain the bullishness that it showed. Look at the big size of that. It tried to move and break out the channel, and exactly that's where the pressure came in and fall back in the channel. Right? This is clear pressure on the bears are attacking like anything is very much evident from the Dow Jones chart that you see on medium term. Right? So US not that great looking. Dollar is also not great. Look at the candle size in the dollar index that's spiking the wide range bullish candle, 2.4% up, right? 0.4% of the USD INR again heading back to the all-time high nearby levels, rupee to the weakest levels. So US markets and dollar is not great. Crude is okay, but it is at a support zone on the momentum and the price point of view. It is still trying to maintain that below 90 levels. Right? The support zone, it may consolidate here and hope it does not spike back to the parallel channel top. Gold has crashed. It had recovered after a similar crash to the support zone, and now it managed to just climb and close above the resistance from where it had fallen off, but once again from that level again back to the previous support zone is what it looks like. Big crash, bearishness back again, but momentum is still not slipped back to the bearish zones, right? But the kind of candle that was formed yesterday is clear bearishness. But overall, in the medium term, the sideways movement is what is happening in the gold, which is mostly used as a hedging instrument, right? So crude is okay. Oil is crashing below, maintaining below 90 barrel is fine. But US markets and dollar shooting up is not great. Two stock picks next week. The Adani port, the Adani group itself is breaking out. All the stocks in that. It's a rectangular pattern, and RiskReward should be fine if it breaks out. If you make the entry above the breakout zone and then put a stop loss just in the first candle below. Momentum is at just touch the bullish zones. You'll have to see whether it takes resistance here and falls. So if the price is moving above the rectangle patterns, last candle high, then obviously momentum also will climb and settle in the above 60 RSI. So it should be fine. And then you put long if the signal comes in, not right away. About reality, the reality sector, reality sector outgoing group stock. So real estate development, and it's a parallel channel that's moving through, and it is a rectangle pattern that's there, and there is a lot of scope for it to move up to the top of the channel. Momentum has climbed in the medium term also. Trend is also looks good on the medium term, so that should work out. The sector also is not bad. Adani is infrastructure, but this is monopoly port infrastructure related area, so both of these should give good risk-reward trades if it works out. The breakout happens on the rectangle patterns, right? This is the index playout that can be done, which is a ratio spread where you are combining a call spread and put ratio spread. Right? Call ratio spread and put ratio spread are combined together. Remember, this is a giving good probability, and max loss is not mentioned as undefined loss because of just the factor that is not hedged on both sides. You can do that, but look at the range, 1,200 and 18,100. So as long as you are ending in that such a wide range, you should be fine, right? Even if it falls, it's not going to fall below the 7,200 that easy in a week's time. It may not be possible, but everything is possible in the market. It can surprise you anytime, so you have to be cautious. So whenever there is a breach that's happening after the pre-market, you have to immediately go to the break-even points at these zones and then take the buy hedge. And if it is breaching, another strategy that we can do is to sell the opposite side twice. Right? Opposite side strike at the break-even twice. That way you can continue to reduce the loss, but having a buy option at this break-even would be ideal to reduce your loss. First step. Second step would be to sell the opposite side twice, so that if the market continues to move towards the tested side, right? So that's a kind of adjustment that has to be done. So to be cautious, is not completely hedged. It's not something that you have to sit back and wait and then you get it or don't get. It's not like that. Anything could happen. Big crashes and big moves of 700, 500, 600 kind of moves happens, then nobody can save. So we have to be cautious about the the adjustments that has to be done, right? If you are taking the overnight positions, then always go for a hedge at this point and then reduce your chances of overnight risk, right? Normally I don't put non-hedge positions, but this is giving a very good wide range, which is very less likely to break. We're looking at the charts, so that's why this is known as a doubled ratio spread, right? Having the same strikes, put and call. Basically, you're selling double of what is bought, right? Call ratio spread and put ratio spread is combined together, right? This was the same kind of option strategy that was mentioned last week also. This gives a good range is the advantage, right? Going on, wrap up. So what a week it was, right? It was truncated week, 2 days of up move, 2 days of down move, right? And that brings in a retracement of more than 1% in the indices after a rally of 18 23% of all the indices. If you see, Banknifty had done 23% of move, so much anticipated pullback has come. Would that be a small retracement, or would it be a big beginning of a big down move to make a new swing low or not? That is what we don't know. But so that way we are still in a crossroad. We are in a crossroad. Market is in a crossroad basically, because of the just a simple reason that if you look at this chart, it tells you why we are in a crossroad. Right? If there is a close that's happening in the weekly charts within this tunnel channel, then obviously we are in the downside. If this ignores this inverted camel or reversal pattern, whatever we call it, and then consolidate here, take the support at this zone or slightly below and above the trend line channel, and then takes up enough energy to move further up and break the 1815 levels of the previous swing high, then probably we are taking a small pause and moving up. So what really would happen? It's in a stage at this point in time. The VIX has spiked off upside. PCR is saying not a good story. It's less than much, far away from the one. Why build up is saying long. I know I'm unbinding my longs. Right? Price action is showing retracement. Right? All this is telling some more consolidation or retracement that can happen at this price zone, or even some more correction can happen at this zone. That's what it indicates, right? The VIX, PCR, and OI. But look at the change in polarity possibility potential. Look at the divergences of the momentum that we talked about in both the indices. Look at the momentum, it is still maintaining that bullishness in the short term, and the trend also. The FIs continuously buying, despite the fact that it had a big correction. It was the DIs who caused a correction, right? Which is positive. Right? Still indicate that there is a bullishness. So mild bearishness is my market view for the next. It may be a small pullback. That pullback hopefully does not go into the sideways zone. It may be some kind of consolidation at a bullish zone. So mild bearishness for the short term next few days to so US markets charts are not showing very encouraging thing. It is struggling there. The wick size indicates the selling pressure, and remember that US market has been reversal mode for some weeks now, but it's now feeling the heat to further move up the trend line channel. So we'll have to see whether any big moves are happening or not. If it's small candles, then nobody's. If it's big crashes of 500 points, 600 points kind of falls happen in the indices, then obviously our markets will follow the same. So the recession fears, the inflation fears, Fed hike rates, repo rate hikes, US war, China war, all these concerns, uncertainties are still not cooled off. It is still there. Crude oil is not. It's cooled off a little bit, but dollar is spiking like anything. Once again, rupee is weakening like anything. So all of these uncertainties not fully ruled out. It's still there. So that's why the VIX is not ready to go below the 15 yet. It's still less than 20, which is positive, which makes it tradable range for derivatives traders. Right. So the levels that you need to keep in mind is 79, 21, 40,000, 161 on the Nifty upside, and 17,560 and 38,400 Banknifty on the upside and downside. On the downside, right? So these levels is what all that we have is the support and resistance levels. Right? The probabilities of price taking a resistance or taking a support at this are more, and play your game accordingly is all we can do. Right? We cannot predict what the market will do. We can only think about probabilities and then do some actions which could turn out to be probably right. Right. So that's my view. Mild bearishness for the next week because the market is at a crossroads. We are at a edge, right? So always hedge your positions, and if your portfolio is in good profit, book some of it if it is good enough. And if you want to protect it for longer term, use SIP modes for and option strategies like cash equity puts, and hedge your positions well and use hedging strategies so that you don't have overnight risk. Right, so that's my view. If that helps you to frame your view and your trade plan for the next week, then consider hitting the like button and share it to maximum. If you're not subscribed, definitely consider subscribing it. For sure, we have very few subscriptions and appreciate your help in this regard. Thanks a lot for watching, and happy trading, happy investing, happy learning. Bye.